Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Ashwani Gujral, Sudarshan Sukhani and Mitessh Thakkar now join us to take us through the initial hours of trade. Good morning, gentlemen. Ashwani, we've had 3 days of strong gains. What's the trade this morning now? Do you want to take home some profit on long trades? Do you want to initiate any shorts, or do you think at lower levels this market would be buy again?
Well, good morning. And for the moment, Bank Nifty is again having the same problem it had in October. For some reason, at higher levels, PSU banks start to decline very strongly. So if Bank Nifty is not participating, plus we have crude which is now getting above 64. So, you want to be cautious at higher levels. So if you've been riding this since 10,100, it won't hurt to take some profits off. But on the Bank Nifty, I'm now willing to trade on both sides, because the kind of action it's shown yesterday and the way premium shrinks every time we move higher, it appears that financials may drop out sooner than expected. So it's basically IT which is going to pull up the Nifty. Reliance is also kind of flattish. So probably beyond 10,400, 450, if crude goes up further, there may not be too much life beyond that.
Okay. Good morning, gentlemen. Yeah, I mean, today there could be a lot of reasons why the Nifty Bank would have to hold its fire, if it has any. It's not just crude, bond prices, inflation numbers. It has enough to worry about. And actually, today is the last day. Tomorrow is the last day when all those 29 cases will have to be taken to the NCLT. Now, while this is known for the last 6 months and therefore factored in, you still don't know exactly what the haircut might be. You may never know. You may get some adverse news. So for a whole host of reasons, people will have to be a little cautious about the Nifty Bank, I would think. Okay, good morning, Sudarshan. How would you trade Nifty and Nifty Bank?
Yeah, good morning, Latha. Well, we have been riding this trend from the very beginning on Thursday morning. Now is the time to take profits. And apart from any other extraneous reasons, the larger reason for taking profits is that we are coming very close to that strong resistance area, that 350-400 zone in the Nifty. Remember, before this decline, the Nifty went and spent 5 days in that zone. So that's a very strong resistance area as of now, and it could not cross it. So all long positions, I suggest, should be closed. That 50-point band could cause a lot of anguish and pain once again. The Nifty Bank is a very different chart. Somehow it has not participated with the same gusto and momentum that the Nifty has in this 3-day rally. And that tells us that banks should be an avoid even for individual say stock trading. And it's quite possible that banks may see a slide. I'm not going short simply because the trend is up, and I prefer to stay with the primary trend. But I think there are intraday shorting opportunities otherwise in the banks.
Okay, fair enough. So the primary trend is on the upside, but today, because of the rally we've seen, perhaps you could see some petering off, and of course higher crude prices could put pressure as well. Mitessh also joins in. Mitessh, would you concur with that view?
Good morning. So, I've been maintaining that this rally should have targets close to about 10,350, which is where the last time when the markets fell, there was a gap down kind of a break, and this gap should act as some kind of supply zone. I think this gap will hold and produce some profit booking as well as supply pressure. The overall trend still, or the short-term trend still remains on the upside. So I think I would still, use buy on dips kind of strategy. Closer to about 10,290, 270 zone would be a good buying area. Keep a stop below 10,240. 10,350 should be a first target, and once we cross that, then I think we are looking at 10,405, 10,480 on the upside. So not much, but I think a retest of earlier highs can happen once we start getting past 10,350. Till then, wait for dips to buy into.
Okay, that's interesting. Let's discuss individual stocks then. Ashwani, what's on your list?
See, still buys probably more on the mid caps. I think JM Financial is a buy with a stop of with a stop of 154, target of 168. MM Financial is a buy with a stop of 473, target of 495. Spark is a buy with a stop of 460, target of 485. Tata Global is a buy with a stop of 293, target of 310. And Minda Corporation is a buy with a stop of 190, target of 205.
Okay, so those are Ashwini stocks.
Two financials, Ashwini, they won't be impacted by this general rise in bond yields and inflation and crude and stuff like that?
See, JM Financial has corrected very sharply, almost from 190 to 150. So maybe that's more a broker dealer. MM Financial, made a fresh intermediate high yesterday. So chances are it has some sort of inherent strength. But let's see how badly the crude impacts. We'll know that in the first 5 minutes.
Sure.
Okay. Sudarshan, one of your favorite stocks in this bull market has been Z Entertainment, and it always crops up on your list. It's there today as well?
Yes, it's a favorite. It has been. It had a 8-month trading range, and about a month ago or 3 weeks ago, it broke out of that range on the upside. That tells us there's a significant upside and a strong momentum that's going for the stock. As of now, the stock has been trading in a small range. I expect it to break on the upside again. So Z Entertainment is a buying opportunity. Castrol is also a buy. A large trading range has morphed into a bullish head and shoulder. That bullish head and shoulder tells us that some kind of a bottom is now in place in Castrol. Okay. It's a swing trade, it's a day trade. You could also build a position in it. So Castrol remains a buy. Sun Pharma is a buying opportunity. A 5-week trading range repeatedly finds support at 500. It comes to 500, finds support and bounces back. It's done that 3 days ago. So if not anything else, a rally towards 540, 550 is possible in Sun Pharma. And who knows, it may eventually break out. Two short sells, JSW Steel, where signs of distribution are now evident, and I think probably lower levels are coming. And Infratel, where Infratel has given up all its gains, it rallied from 350 to 500 and has come back to 350. That's surprising. So that tells us there's a lot of weakness and more downside.
Okay, Sudarshan, there could be a tailwind for pharma stocks today. But have you looked at the chart of Dr. Reddy's? That's the one where there's a bit of positive news.
Yes, Dr. Reddy's is not something I would like to buy. It may have positive news, but if you see the charts, it had a small trading range. It broke down from that range. So there's no charting reason to buy. It could be something else.
Okay. Mitessh, what's on your list, buys and sells?
So I have many buy calls and one sell. Aurobindo Pharma, and I think Latha was just flagging out pharma stocks, and we had a buy on Lupin yesterday as well. And Aurobindo Pharma is also on the short-term charts, given a good buy signal. So buy with a stop at 680, look for a first target of 710 here. The second stock is NHPC, which is giving a positive crossover of indicators on the medium-term chart. So some kind of a trend is starting, which could last for a few weeks. But the first target here is 30.5. Buy with that with that kind of target and keep a stop below 28.20. Repco Home Finance has given a breakout from trend line, so buy with a stop at 627, look for 680 as the target. And yesterday IT names were doing very well, and TCS at the end of it had a very good intraday chart, so should see more upside. So buy with a stop at 2644, look for 2700 kind of a target. And solitary sell call is in Fortis with a stop at 143.25. I would recommend selling this one for targets close to about 128, 129 on the downside.
Okay. Well, again, I'm surprised only with that finance stock like MMFSL. I'm just worried Repco Home just today because of the bond yields, whether it will get swept in the overall bearishness. But yes, we'll have to wait and see. There will always be individual outperformers in sectors. We'll take a break on that note. We are coming back. Kunj Bansal of Centrum Wealth Management joins with some long-term stock bets. We will also analyze what may happen in the bond markets.
Big talking point this morning is the huge spike up that we've seen in Brent crude. 2.5-year high is what we are seeing, $65 a barrel now. In fact, inching higher. Just in the last half an hour, it's gone from a 0.5% gain to now almost a 1% gain on Brent crude. Won't be boding too well for many pockets in our own markets. Manisha Gupta joins in to give us a quick roundup of all this and more. Hi, Manisha. Good morning.
Thank you for that, Sonia. Well, yes, as we've been talking about on how the crude oil prices jump up has been quite steep. And after 2% gains in the New York session yesterday, nearly a percentage point higher on the screens right now. So even as we are making 2.5-year highs on Brent, if you look at the kind of premium that Brent is holding versus the US crude oil prices is the highest in last 7 years as well. So that's the kind of moves that we have seen. And the markets would continue to watch out for further developments coming in from UK, the winter demand from US, Canada, etc. And all of that continues to support the the prices. While you have the crude oil prices run up quite strongly, the other side is the industrial metals and the precious metals, which have continued to decline. So when you look at the gold and silver prices, they are trading at a 5-month lows, and the bullish bets on both of these commodities also are around 17 to 19-week lows. So there are not too many people betting on the higher side for precious metals as we head towards the year end. It's a similar scenario for the base metal prices also. We are trading at a multi-month lows for many of them. The US dollar strength ahead of the FOMC meeting today is putting pressure on the prices. Most of these metals in Shanghai have opened on a weaker side. Even as you saw the China investing, loans, vehicles data, trade import, export import data, all of that coming on the positive side, there is very less buying interest for many of these metals as well. While of course the fundamentals are strong for a couple of metals like copper and zinc getting into 2018, all the other metals are into year-end profit taking as we see them right now.
Okay, Manisha, thanks a lot for that. Before we move forward, Ashwani, I just wanted your thoughts on how to play the commodity theme today, because we've seen big rally in most commodities.
See, first of all, the market probably will not take it very well. So maybe look at going short on the financials and banks. But if metals have also done well, I haven't seen that. I think OIL, ONGC, metal stocks, they should do well. So, 64 was that place where crude was stopping, and the crossing of that and closing above it, that just shows that maybe crude is ready for the next move. So it may not be all that hunky-dory that we'll get, all-time highs, etc. We could be doing this range of 10,100, 10,400 if this continues.
Okay. We are going to be speaking with David Lennox later on to get a hang of how crude prices might go here on. But, Indian bond yields didn't wait for that big crude spurt overnight. They already spiked to 7.17% yesterday. That was a rise of about 8 basis points in yields. It's not a normal phenomenon for 8 basis of a rise without adequate reason, one would think. A. Prasanna, the chief economist at ICICI Securities Primary Dealership Unit, joins us now. Good morning, Prasanna. 7.17, I mean, what is troubling the market so much?
Good morning, Latha. Market is kind of positioning itself ahead of the CPI data. We do expect CPI to come around 4.5% and core around 4.7%. And from here on, the prints are going to be higher. That is based mainly on food prices. And we have to remember, most of the rise in crude prices has not been passed on to domestic prices. So it's possible that post the Gujarat elections, there will be fuel price hikes as well. So all in all, the inflation outlook doesn't look very good in the short term. Plus, there's a lot of uncertainty about the fiscal outlook. The government has dropped hints that there might be a fiscal slippage, there could be extra borrowing, but they have not provided any clarity on that. I think till the time there is some clarity on that, this uncertainty means there will be a lot of upside. There will be more upside to yields.
So is this crude hike that we saw overnight likely to push it further? Today we had someone telling us that it could go to 7.25.
I mean, see, it's possible that the overnight crude rise has an impact, but I guess today probably a market will wait for the CPI data. So more price action could happen tomorrow, and today could well be a muted day. As far as levels go, I mean, it's difficult to put a number. I mean, it can go higher than 7.25 also, right? I mean, we do think based on slightly longer-term inflation expectations, somewhere around 7% is reasonably priced. I mean, I wouldn't say it's a buy level, but perhaps around 7% is where the 10-year is reasonably priced. But then now, like I mentioned, there are so many uncertainties, and till the time there is clarity, I think there's not much buying interest, and that's what is pushing up yields.
Prasanna, are investors anticipating a turn in the monetary policy scenario in emerging markets as a whole? Because you have inflation, oil prices rising across the board, and the expectation is that perhaps, most of these markets would move into a period of steady rise in interest rates and bond yields. Is that what you're expecting too?
So if you see already, I think Korea has already hiked rates. So yes, I mean, that expectation is there that monetary tightening will start and proceed in emerging markets. But if you look at Asia as a whole, I think definitely some of the countries which have very low interest rates, policy rates, those will be the first ones to tighten. And India, of course, RBI or the MPC has always maintained a fairly high real rate buffer, which means our rates are slightly on the higher side, which should give them a bit of a breathing room. So as far as the domestic market is concerned, I don't think anybody is pricing in a rate hike within, say, the next 6 months. I mean, beyond that, definitely there are some expectations that I think could start. Our base case is for the whole of 2018, there will be no change in interest rates.
Okay, so just coming back to that earlier point you made about the government finances as well, because bond yields have been moving higher since July when concerns on the government finances cropped up. So do you get a sense that meeting this fiscal deficit target of 3.2% could be a tall ask now?
So a couple of things. One is, I think a lot of this uncertainty or fear about slippage started from September onwards, when the borrowing calendar was announced. That's when government started dropping the hints. Prior to that, anyway, I think yields were on the lower side, right? I mean, there is a monetary policy cycle also. I mean, after the August rate cut, I think most of the participants in the market understood that the easing cycle is over. So that also got priced in. And then on top of that, the fiscal concerns came. So as far as what the government can do, we have been saying that this whole introduction of GST in the first year is negative for central government finances. It's positive for state governments because there is a backstop for state government tax revenues. So in the first year, at least, it's going to be very, very difficult for the government to meet its target. Now, of course, mathematically, they can always meet the target by cutting spending quite severely, which to some extent they've started doing. But I really don't think they should force the pace of consolidation. I think market has already kind of discounted some slippage. I would say that extra borrowing around 25,000, 30,000 crore is also already in the price. I think what is more important is they come out and announce it. Also, for next year, they should have a clear goal in mind, a target, and if it's possible to communicate that or to communicate a new fiscal roadmap. The problem is we have been having these fiscal roadmaps for the last 2 years, and the governments don't stick to it beyond 1 or 2 years, right? So a slightly longer-term roadmap, addition on this FRBM committee, whatever recommendations they gave, I think these are what will help. I mean, we need a medium-term fiscal anchor. Without that, all these kind of episodes will keep recurring. Okay,
Prasanna, finally, is this rise in 10-year bond yield having a larger impact on non-government paper? How are CDs and not even CDs, actually CPs and NCDs behaving? Is there a spike in yields?
So anyway, in the second half of the financial year is busy season. I mean, credit demand does pick up. I mean, issuance of these papers also picks up. So there is a rise in yields at the short end also. That is completely unrelated to what is happening to fiscal deficit and long end. Yeah. But otherwise, yes, I mean, we would think at the margin this rise would perhaps ensure that some of the corporates will wait before entering the market. I mean, it's possible that corporates are waiting for some clarity from the government so that the government market kind of cools down and then they can come and enter. But what also shouldn't forget is even if government bond yields settle down, I think the bigger issue for corporate bond market is the state government yields, right? I mean, state government bonds are in some sense, they're a competing product for corporate bonds. Yeah. Right? Yeah. And those, I mean, those yields are also fairly high. I mean, the spread of around 75 basis points over G6. So in that sense, I mean, the overall pressure, the supply pressure is fairly high, and that will reflect in other segments of interest rate markets also.
All right. Prasanna, thank you very much for joining us. So if they are, I mean, the key number we have to watch out for, if it is a 7-quarter on 10-year and state government paper is trading 75 basis points over that, then all corporates will be borrowing, tap the wholesale market. We'll have to borrow over 8%. Yeah. So the good days of that 7.5% borrowing seems to be over.
Okay, well, that's about the money market. But let's get back to our own markets now because we have lots of stocks to discuss. Kunj Bansal of Centrum Wealth Management joins us now to talk about some stocks that are in the news. Kunj, good morning. The talking point this morning is the spike up in crude prices. If we do see a dip in, paint stocks, tire stocks, anything that you would buy here?
So not necessarily in paints and tires, but since you asked basis the crude spike that has been happening, Crude derivative based company is a company called SL Propec, which manufactures specialty laminated tubes which are manufactured out of the processed plastic, which is a crude derivative. So that is something, although the crude prices have been going up and as a result should result in the raw material prices going up. But let's keep in mind that despite a B2B, business to business model that the company has, wherein it supplies its lami tubes to almost all the FMCG and pharma companies, both in India as well as abroad. The company has close to 19% EBITDA margin, and to that extent it is in a good enough position to absorb any such temporary rise in the raw material, and also has a formula to pass it on to the customer if the rise happens beyond a level. Now, in today's market, when we are close to life highs, it's important that we try and find those stocks which have either corrected and or are available at a valuation lower than the historical highs that they have had. And this is one such stock which is available despite the market being high, with a ROE close to 20% plus a forward PE ratio of around 15 odd times. And that is where the comfort comes. The top line growth was relatively subdued in last few quarters in line with the FMCG industry growth, but that is now expected to move to low double digit, and that's where it makes a case for investing in this stock.
Okay, Kunj, good morning. Let's talk about some other stocks. ONGC, Oil India, would you be buying these stocks now that we have seen a big surge in Brent prices once again?
So, I don't have any specific view on this stock. The only things that I can add is that if we look at the longer term performance, and any long term, you can take whatever long term you like. You can take 3 year, you can take 5 year, you can take 7 year, you can take 10 years. These stocks have not given returns despite such a long period. Now, how long? Equity we all know and we say is a long term investing and does give return in the long term. But if a stock doesn't even give me return in 5, 7, 8, 10 years to a long term investor, then I don't think that makes any case for investing in such companies. And the reasons are obvious, part of the nature of the public sector ownership, which results in the lack of clarity in terms of multiple things. Two, of course, coming from the commodity crude-based business model that they have. Three, the dipping production that these companies have consistently been having the case with. So to that extent, I don't think it makes a case of investing, though I don't have very specific view on these companies.
Okay. Well, SL Propec was one stock that your house is recommending. Is there any other mid-cap stocks that your research has discovered?
Yeah, so based on the ongoing research that our team keeps doing, the other sectors or the sub-sectors, if I talk of, which look good, both in terms of, as I said, one at highs of the market, we have to look for the stocks which are available at reasonable valuation, and whose results are expected to improve. So textiles is one such sector wherein there was some stress for last 2 quarters in the whole sector because the raw material prices, that is the cotton prices, had gone up, and which have now started to soften, are likely to remain that way, and as a result the margin trajectory of the whole sector is likely to come back. Valuations are attractive, so one such stock in this space is the KPR Mills, one of the mid-cap companies, South India-based companies, which is a fully integrated textile company, manufactures yarn, fabric and garments. And then there are some other small businesses also which do not contribute much to the top line and bottom line. So coming back to the textile business, company, despite being in commodity kind of business, still has close to 20% margin on a consistent basis. So what I'm trying to say is that reflects the kind of business model, the kind of pricing power, the kind of way to pass on the price hikes and falls that the company has on a medium term basis. There could always be 1 or 2 quarters of dip or rise based on how the raw materials move. But if we look at last 3-4 years, the company consistently has close to 20% margin, and available at a forward PE ratio of around 13 times. So that's another stock which looks good for medium-term investing.
Okay, Kunj, thank you for joining us and talking about some stocks that you're bullish on. So those are a couple of ideas like SL Propec, etc. But let's get to an issue which is of national importance. A lot of you must have been panicking recently on rumors that perhaps deposits won't be protected by the government, your bank deposits that is, and that's a significant issue that all of us could have if that actually comes through. But these are purely just rumors, Latha?
Well, it's not rumour. It is based on a bill that is in Parliament. It's called the Financial Resolution and Deposit Insurance Act. It is with the parliamentary committee, and the committee will submit its report probably in this winter session. Now, the point is, what does this bill do? We are all concentrating on the fact that deposits will be in a problem. What is that bill trying to do? It is setting up a financial resolution corporation. Until now, when a bank failed, what did we do in the past? You had RBI come in and take a global trust bank, merge it with Oriental Bank of Commerce. Sangli Bank was in trouble, it was given over to ICICI. United Western was in trouble, it was given over to IDBI Bank. I mean, in the last 10, 15 years, whenever we had troubled banks, Bank of Rajasthan again went to ICICI Bank. So we didn't have this resolution corporation. Now this bill says we will set up this corporation. Now, what is troubling people? Not the resolution corporation. The bill says that what the resolution corporation will do is it will try to bail in the banks, not bail out. Okay. The idea being that all over the world this cry that taxpayer money cannot be used if there is a wayward financial institution. The people who have invested in an institution will pay for it. So the Act puts out in clause 52 to 55 the way in which it will be bailed, and it says first bondholders, their money will go. It also says deposits may be used. Okay. Some part of the deposits. It doesn't say it in as clear terms. It says the only money that we will not use are insured deposits. Now only 1 lakh is insured for all of us. Okay. So the big fear that's running riot across WhatsApps and Twitter is that therefore over 1 lakh will it be taken away. Now, I yesterday tried to get Dr. Y.V. Reddy to speak about it. His point is, yes, I am getting a lot of panic and the panic has to be addressed. And he actually raised a very different point. He said, do we need the resolution corporation in the first place? If we are managing, at the moment without a corporation, why are we trying to fix something that ain't broke? The widespread fear is also a result of this demonetization feeling that, the government may say that take some short-term pain for long-term gain. That fear is getting reiterated. And my big fear is that what will happen is people will start pulling out money from the weaker banks. If you don't address the fear, the finance minister is doing it on a daily basis. The PIB has put out releases. Exactly. But the WhatsApps go on. Exactly. Social media is, it's a raging fear in social media.
As Samir was saying that day, maybe, it's become anti-social media. And, it was, for beginners, I think it was irresponsible reporting as well on, a couple of publications. And look, no government can get away with, something like this. But I take your point. The problem here is strong banks are fine, and PSU banks are fine. Weak private banks. Weak private banks, I think, is the biggest worry. I mean, that is where you would have.
Logical.
Yes.
But do you know? I had a friend of mine, an acquaintance of mine, telling me his wife is telling him to pull out all the deposits and put it in foreign banks. I mean, that is the limit that all Indian banks' deposits could be touched by this government. I think this is a backlash of demonetization. Oh, if they can do something which has never been done in the last so many centuries, so much fear, maybe this will also be done. So telling people that, oh, it didn't happen in Global Trust Bank, oh, it didn't happen in Bank of Rajasthan is not cutting ice. And therefore, I think, something will have to be done. They will have to upfront say in the bill that,
deposits won't be touched.
Yeah, bank deposits. And actually they can't be, because when I read the bill, and I passed it through 2 lawyers, their point is that when you contract your deposit itself, the clause will get written that this is a bail in a bill liability. And until now, the deposits don't have that clause. So current deposits cannot be used. This is for the future. But try saying that on WhatsApp. How do you even explain this? I've tried talking on Twitter and people thought that I was actually supporting the government. That is not the idea. The bill at the moment doesn't risk your deposits. But I think, as Dr. Reddy advises, it's better not to even start. In any case, the financial resolution corporation is not the most important thing in the world. We have enough problems. We have to tackle GST problems and growth problems, the twin balance sheet broken problems. Why are we trying to pull out something which is not broken? I think the government will really be well advised to say that we have, put this into cold storage now. It is not high on our agenda. Or if the bill actually comes, to genuinely create and ring-fence bank deposits. Because this fear now is gone beyond the pale of rationality. You can explain the fine points of the law, people are not going to hear. So it's best to come out and say we have shelved the bill for now. We will take it at, at some...
They have, in fact, the government has come out with ads in many papers this morning saying that, the government of India assures the security of money deposited in the banks. The government of India is strengthening the rights of depositors like never before, and special care is being taken of small depositors. So they have come out with this ad in many papers.
Oh yes, there was a PIB release as well. All that has been done, but my sense is that this fear to be reined in now, you have to either shelve the bill, or you have to specifically say in the bill that bank deposits are not bail-in-able. Without either of these, I don't know if this fear will be quenched just yet. But let's leave you with the thoughts we got from former RBI Governor Y.V. Reddy. I spoke to him about this panic yesterday.
The other issue I wanted to ask you, and again, this is a law which we, only the text is available on the PRS website, of a financial resolution corporation that is going to be created. Now, this FRDI bill is making everyone anxious because it says that when a bank fails, the deposits of the bank also can be bailed in to bail out the bank, as it were, convert some of the deposits into share capital, or maybe extend the tenure of the deposits. It is creating panic. Should people panic at all? After all, Government of India and Reserve Bank did not allow Global Trust Bank depositors to to lose. It did not allow Bank of Rajasthan depositors to lose. Should we panic about this bill?
If that is so, then why is bill? If the existing situation thinks there is a problem, I mean, I'm just, the counter can be, the existing situation is not creating a problem, then why are you having this law?
Okay.
I'm not...
They're trying to create a resolution corporation and maybe...
Because it is
superior.
The question that's being asked, I mean, I'm just...
okay.
I don't know. I don't know the detail.
Your counterfactual question.
I don't know the detail, but normally there's a problem, then there's a solution.
Okay.
What you say is there's no problem, so what's your problem? I said, if there's no problem, what solution are you trying to give?
Okay. Well, okay.
So why are you trying to give me a solution when there's no problem?
All right. So basically, you think people are justified in being...
I don't know, but definitely people are panicking. That I can tell you. Yeah. Any number of messages I got, and I'm again pleading ignorance because I don't know much about that.